Good morning, everyone. How's everybody doing? Alrighty, let's see what's going on here. We are overnight inventory short. Right, 70-80% of the volume is underneath the close of yesterday, which is good. It's allowing those short sellers who got trapped in this move to come in and do some covering. If we break the overnight low and the previous day low, yesterday's low, I'm looking for the 74.06 and a quarter. Now, the reason I'm looking there is that's where the shorts are trapped from 2 days ago. Okay? So, if we can get under 6, then we're going to be looking at 73.91, right? So, right now, let's see what happens when we go take a look at the more detailed chart. And there's the overnight low, which didn't take out yesterday's low earlier on in the session. So, what we're doing is we're going to see if that actually happens. Now, I had a heck of a time with the balance zone. When I came in, I looked, I went, I said, okay, this is too small. And I ruled it out. Now, you could use this as a balance if you wanted as well. But what I did was I cheated a little bit. I used the balance zone from the end of the day yesterday. And I used 74.29 to 36. Now, we're doubling it to the downside is at 13 and a half. And if we had to go into 4 times discount, I'll just draw these out just in case. I'm not going to be able to trade this morning. I got a whole bunch of calls and stuff to deal with. But let's see. So now we're doing a look below and fail of 74.13. Let's go draw where the sellers are going to be. Okay. So if you're doing a look below and fail trade, so now we know the sellers are here. Okay. So now you've got your sellers mapped out. We haven't taken out that low yet. Also, while we're on this call, and Doc, I hope you don't mind, I'm going to ask anyone who's really, really proficient with CR chart. Ian, are you around this morning? Our friend Stealth is having some issues with his CR chart. And Stealth, I'm going to ask you to post what you sent me in the CR room. And I'm going to hook you up with Ian and see if he can help you with this. Okay? Ian, meet Stealth. Both of you guys are in my coaching. I can't figure out what's wrong with his charts. It's got to be something simple, but it's gone above my pay grade. So if you guys could just DM each other, that would be great. All I can think about is session time, but it must be something other than that. Or his profiles aren't split the right way or put together the right way. Okay, so no look below and fail really of 13.5. Let's see if we can. Okay, we just put in a new overnight low. Hey, voice is a little better. It seemed like it was better yesterday. Today my voice is going to get beat up because I've got calls to do and stuff, so we'll see how resilient it is today. It seems to be getting better. It's really weird though. I still have the sniffles. So it's kind of slowing down, right? What I'm curious is if we take the previous day low and these stops, that's going to take out. This is where the shorts got trapped yesterday into the end of the day. Now, if you oh, sorry, not yesterday, 2 days ago. And this is exactly the area that I was showing here, the 7406. That's exactly what I'm looking for. Is can we take this out? And what's going to happen if we get down here? So if you are already short, say you were shorting, oh, there's a seller there and you're short like 13, stop 13.5, 14, right? I would use the middle of this zone to go and throw some bids in. Just generally because the algos usually start to bid the middle of a zone. So here we go. And this is a great education. You can see if we're going to take out this previous day low or not. Now, there's going to be some natural short covering here because we have shorts are trapped here. So they will front run and buy this area. Now, why don't they buy it down here? It's because they don't have size, right? I mean, or sorry, they're trading size. So if I was short 2,000 contracts, and if I wait for it to come down here, I might not get, there's other people who are short 2, 5, 10, 7, 8, large size. They're going to come in and they're going to start putting buy orders in here. So if I don't start buying back a little here, then I'm not going to understand what's going on here. So you got to get in there and you got to put your bids in. That's exactly what's going on now. And the low is just one tick shy of yesterday's low. Will that last? My first thing to say is probably not. But if that low does hold, it's going to tell us that the wholesalers don't need to sell under 10 because they see buying at 9, 9.5, 9.25, etc. So had I been short, say we were short 13, I'd be putting some buy orders in here at 10.25, 10.5, 10, right? And if you're short, like say 5 or 10 or 15 contracts, cover, say you're short 10, I'd cover 5 here, and then the rest of your bids would have just gotten hit, right? That's why when you're short, say you're short here, stop here, you go and you put your buy orders in. So when the market splashes down like that, you're in line and you actually get product. See? Now let's see, when we get back up to 10, there should be a seller at 10. There they are. See? They're right there. Watch the offer. If you're doing a look below and fail of the previous day low, you want to wait until it gets back up and reclaims 10 with some strength. Knowing that they're going to be sellers all the way up, right? The top of each one of these candles is going to be sellers. Okay? So you have to be prepared for that if you're looking for a look below and fail of this. What I would like to see, for me, a better scenario would be to come down, take this out, come back up, and then reclaim the previous day low. Clean this area out, then this unknown would turn into a known, right? Into a known. And then once we reclaim that, then we'd have flushed out that inventory. Now that takes patience. And our Croy this morning, she said something really interesting. I was on a call. She said she's very picky about where you do business on the chart. So instead of waiting for your setup, right? How I say setup, nobody really gets that. When I say way of doing business, does that make sense if you're picky about where you do business on the chart? Does that resonate with you guys? Can you understand that? You're being picky about where you do business. Okay, cool. Good. Howard, you're there. Did you see my answer to your question? Good. Hey, Trade and Balance, welcome to the room. So now we're just chilling out, waiting for them to tell us where the low is. Inventory is short. We're right at that 7-6 area that we were looking at earlier. We're just waiting for bids to come in, see if they come in. I'm in no rush to trade this. If I was short off the 13s, I would have covered already. Larger size traders would put their buy orders here, just in case you get that splash down. There we go. London's opening. Notice it's a little choppy here, right? There's a big push-pull. As we take those stops here is exactly what I'm looking for. So if you were still short and you had your buy orders in, you'd be getting filled down here. If it takes out 7 like it's doing now, we'll be looking for 5 3/4 and see if we get a print there. Watch the reaction. It's healthy to see some selling. That's that last stop from 2 days ago, and everybody's caught short underneath here, right? So when we took out yesterday's low, anyone who was using yesterday's low as a stop started selling out. That's why you started getting selling pressure. Just let the large traders work this area out. I'm expecting a little bit more downside here. Yeah, there could, yeah, we'll see. There'll probably be some singles if we keep moving. Here we go. So they bought all they could at 6.5. They're seeing selling, so they're dropping their bids. So right now, I have no intention of taking a long at all. I would not be taking a long at all until we reclaim 74.10, which is yesterday's low. Right? If you're not already in a short, it's a bit rough because you if you initiate at the lows, you could get stopped out. Let's see where this thing kind of starts slowing down. But those of you who are short in the 12s and 13s, here comes your bid. It's been very difficult trading. No, Howard, there would be single prints here. There's no singles here. If I collapse the profile. Oh, wait, there are. I'm sorry. Right, you're right. My bad. So there are singles here. There is supply here. Yeah. No, you're right. I was wrong. Time to put on my glasses. My bad. A little bit of short covering coming in. Right. I left this stop marked because I want to see if there's a seller if we get back up here. Sorry, Dave. Autofilled? I'm not sure what that means, Dave. I do everything manually. I just always draw the boxes manually. Yeah, so when I mark them, I just go and I draw a rectangle. And then I go and change the color, red for supply, and then I show the price labels. Yeah, I've been doing it so much, right? I like doing things manually because then you actually know where things are. When you do everything automatically, you tend to lack context because you don't go. It's almost like when you write something down, it kind of registers it differently in your brain than when you just read it. I think automation is great, but I think you should only be automating things that you're really good at, right? Because you miss out a lot of details when you automate stuff. And when I first started doing this, I would draw out the profiles every night by hand. That way there's a ton of little details. Now, not all of them are going to be useful, but at least you get to see things that most people miss. And that's a really, really big thing in retail trading. When people have short attention spans or they're in a rush to do things, they miss a lot. They really miss a lot. You know, when you glaze over something and you don't pay attention to it, there's another trader out there who's watching for that detail and they're going to catch it and they're going to make money off of it. And you didn't even know it existed. And that's the thing about this business. The devil is really, really in the details. The problem is there's so many details you don't know which ones are important and which ones are not. And that's why you need to come learn with us at the Trading Syndicate, right? Little ad there, right? How do you know what to look at? There's 1,000 different things to look at when you're trading. But how much of it is valid and how much of it is just useless information that's not going to make you any money? Oh, nothing to do here. Grab a coffee, chill out. I don't think the low's in yet because not everybody sells at the same time. Exactly. It changes as skill and experience are accumulated, right? Which details matter. I used to write down all sorts of stuff. And then I'd hang out with market profiled guys and they'd be like, there's a ledge here and there's a cliff here and there's an angle here and there's none of them made any money, but they'd notice every little detail. And that's why when I went to this 1 minute candle chart, it tells you the details you need to know. Like what's important. If you're a look below and fail trader, you're looking for a long, right? This chart is telling you that the offer is moving from here to here to here to here. Now the sellers are under 5 3/4, right? So there is nothing on this chart, on the 1 minute candle chart, there is nothing that is telling you to take a long, right? What it's telling you is to chill out and wait for sideways price action, right? And if we don't reclaim the previous day low, there's no reason to take a long. you're going to be waiting for the best deal, which is at 73.82, right? And what did I say earlier? If we keep going, we'll be looking for 73.91 first. That's a big level. So right now, let them go back and forth, right? This is about being picky about where you do business, right? You got to be picky, right? So the short sellers are here. Wholesale is building a little position. They're going to take it up, but there's going to be sellers at 7, okay? Exactly. Find the bid. What they bought here, right? What they bought here in the 4s, they're already selling at the 5s. You can see they're already selling before that level, right? In fact, that level is off just a sec. There's that level, right? So they're already selling it. It's coming back down now. Let's see if it holds this little 4 area, right? Does this stuff make sense to you guys? Are you understanding the mechanics of this? Now we've run out of supply under 7. The market is going higher. Where's the next seller going to be? Here at 9, right? So had you jumped the gun and gone long at 5, right? I don't know where you'd put your stop. If you went long at 5, you'd probably put your stop here at 397 or, just underneath 4, right? But you better sell into this strength because they're going to be sellers. Now, when you come up to this area, there is supply. Let me know if this makes sense. Can you guys understand what I'm saying? Now, a lot of you will be like, well, JJ, we missed the move. You told us not to buy. Yeah, what you're doing is you're letting the wholesalers build their position. Once the wholesalers build this position, there will be a cost basis. Once that happens and we reclaim the previous day low, that's a much better trade for you, right? See how we hit the seller right there at 9.5? Right where we said there would be a seller. Gosh, there's a seller, right? So you can do business one of 2 ways. You can do business where you can risk a lot, right? Or you can do business where you minimize your risk. So being picky about where you do business on the chart minimizes your risk. Now we're getting back into the previous day range. We still have a little bit of supply between just there at 11. It's going to come back down. Now let's see where they bid it. So we ran out of supply. Now if we reclaim and stay over 10, and you're going long in this 10 area, right? Make sure you get your sell orders out, friends, right? So you say you're long 10 on a few. Sell one at 12, right? What's the harm, right? Say you're long 10 and a half. Sell one at 12 and a half. I'm out one at 12 and 3, 12 and a half, right? Sell them, right? Don't be too greedy. It's okay to make 2 points on 4 contracts. It's not going to kill you. If your sell orders don't get taken, right, I'm out, right? So I bought the 10 and a half, so I put my stop underneath, and I sold into these 12 and a halves, right? Yes, exactly. When I reference the previous day low, it's the RTH, yes. So there you go. Make a couple of points, right? You know there's going to be sellers all the way up. We've marked them. We've cleared them. Why did we go through those sellers so quickly? Because we got the supply here. We flushed the market out, took all of that cheap supply, and two things happened. So the short sellers come and cover. This is the smart money shorts. Then wholesale builds a position, wholesale longs. Then other sort of momentum traders start to buy. These big candles are created by people who short here, add here. Here they're like, oh, we got to cover, and they go to cover, and there's no supply. Yeah, exactly, Raj. Remember I told you I'd like to see the market do this, come back, and then wait to take this trade up. Right now, a lot of people will take this trade, and sometimes it'll work, but in a market where supply is not limited, that trade's not going to work so well, right? So I would rather wait for the edge and make less money, but not have to risk as much, right? You really can build on the shorts. And that's a very, 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 very smart thing you just said, Moran, because that is how a lot of people build careers. By trapping shorts, and when people are shorting, you're buying their short position, you know they're going to have to buy it back. You know they're going to have to buy it back. So then you make a couple of points, right? 2 points on 4 contracts, that adds up. You know, 2 points is $100. You know, on 4 contracts, it's a $400 trade. And you didn't kill yourself trying to make it. You kept your stress level down, right? And if you can do one $400 trade a day, right? And what was your risk? Your risk was maybe $50. Sorry, you know, your risk was a couple of ticks really on that trade. Because if it had broken the previous day low, I'm gone. There's no reason for me to be long and try and average into it at 8 and 9 and all, the hell with it. I'm long 10 and a half, I sell 12 and a half. Thank you. Right? So you're waiting for, you're waiting to do good business, right? Even if you make $300 a day, it's $6,000 a month in extra revenue that you never had before, right? And there's not a lot of retail traders who make $6,000 a month consistently, right? And you can always start sizing up once you start building skill, right? You know, it's interesting. Some trader this morning, he asked me, when should I add to positions because I get mad that I didn't buy enough? If you're getting mad, it means that you're not ready to add size because you can't control your emotions. So when you get mad and you start adding size, you're going to screw up. You're going to start blowing accounts. Then you're going to get even more mad. Then you're going to revenge trade. And it's a cycle. You got to stay in your lane and make what you can when you can until you build the skill, until you build the account. I don't like adding to a trade. That's not how I was taught. I've always been taught to liquidate or sell into strength, not to buy more, right? That is not how I was trained. Now, I know a lot of people do it and they are successful at it, but you have to have mad emotional skill and you've got to have money to do it. You have to have money, right? To to add and subtract. The thing is, okay, I'm adding into a trade that's going right. What happens when you add to a trade and it starts to go wrong? What are you going to do? Well, you're probably going to freeze. So adding to trades is not a smart move for a retail trader. You know, until they're trading with 6, 7 figures and they've got skill and they can afford business expenses. Because if trades start going wrong, you have to start scaling out of them. This all comes back to managing positions. If you don't know how to manage a position, the last thing you should be doing is adding to a trade, right? Very, very important. And if you're getting mad and frustrated because you didn't buy enough, that means you're not treating this like a business, right? That's a very childish thing to get mad, right? When it's a business, right? You got a convenience store, somebody comes in and buys one Mars bar. Are you going to be mad that they didn't buy 2 Mars bars? No. Take the money. Do not leave do not leave money on the table. It might not seem like a lot, but it's going to add up over time. Okay? Next target's going to be up in that 17 area where the K high is. So that, my friends, is the look below and fail of the previous day low, using the 1-minute charts to manage the trade. Does everybody get that? So if you were long 10.5, if I still had contracts, right, and I was holding them past 13, I'd be out here for sure. I'd be out probably by 14, 15. Okay? That is the textbook look below and fail of the previous day low. You gotta wait for it though, right? You really gotta wait for it. As you get experience, right? This part is a little difficult to trade, but once you have it mapped out, you can do it. It's possible, right? Or, but you really want to wait until we reclaim because that's a big level, right? This is a big level. The rest of this stuff is just small, short-term order flow levels. But this is a very big, longer-term order flow level. What does that mean? That means there are more people doing business because everybody can see it. Completely different. And that's pretty much it. Anybody have any questions? Hey Phil, good to see you. Yeah, you definitely need if you're going to try and trade size, right? You need two things. You need to have emotional stability, right? Your emotions need to be stable and you need to be clinical about it. Number two, it's easier said than done. Number two, you need money. So you need emotional stability, you need to have the capital, and then you need to have the skill to know when to trim a position and when to add to it. All three of those things don't come overnight. Unfortunately, they don't come overnight. So if you've been consistently profitable for a couple of months doing some scalps, you're not ready yet. You're not ready. Stay in your lane. Do the scalps. Keep your risk low and build consistency. You've got to be able to build consistency. So when you're trading, it becomes almost automatic. So when things start going wrong, you automatically start cutting size without even thinking about it, right? You don't hesitate. Hesitation kills. When you've got size on, if you hesitate, if you get mad, if you get frustrated, if you get scared, you're dead in the water. You're dead. You're going to lose everything, right? You have to have control of those emotions. And the only way to get control of emotions in trading is through skill. There's no amount of trading psychology that is going to surpass skill, right? There's no amount of trading psychology, no matter what you do, is going to be able to surpass skill. And skill takes time, and it takes repetition, and it takes discipline. And unfortunately, there's no way to get around it. That's why we teach you a certain trade. You take that trade over and over and over and over again. And a lot of people, once they start making a couple of grand a day, they're like, I'll just wait for that trade. If it doesn't happen, then I won't trade. They become very picky about when they do business, right? Otherwise, you're just like a dog chasing its tail, right? You've got to be picky about when you do business. You absolutely have to. Otherwise, you can get yourself into insane amounts of trouble. Okay? And that's pretty much it for today. Thanks, everyone. I'll be back at 2:15 UK time, 9:15 a.m. Eastern time for our next session. I'm JJ. This is the Trading Syndicate. If you want to learn how to trade with some common sense, please come check us out. We've got a 3-day trial and we only charge $19 a month. And I promise you will learn with us more in a month than you will 10 years anywhere else. Everything we do is practical. Everything we do makes sense. If it doesn't make sense, we don't do it. Okay? Thanks, everyone. We'll see you in a little bit. Bye for now.